this, just a quick look at the markets, see what's going on here. It's 29th February, leap year. So today won't exist for another 4 years. Anyway, we'll move on from that. We'll start here with Euro Yen. So you can see I've got the monthly, my cursor is, the weekly here, and the daily chart. And today I'll just be focusing on the higher time frames just to get a bit more of a longer term outlook, couple months. So anyway, let's get started. So you can see here, Euro Yen was in this bullish sort of trend, and it failed to break this high here, and it made a lower high, which means we're starting to see some bearish price action. And you can also see this MACD level has a lower peak compared to this, which makes sense because it matches this here. So what's known as bearish MACD. So from there we've broken down into this sort of pattern and failed to break this low here, come up, stalled on this 122 resistance, 0.382 Fibonacci, and just looking for this movement back down there to potentially form a double bottom, then a continuation to the upside for a long, but at this point just looking to trade a movement down to that 116.5 level. Weekly chart, same thing. You can see it's respected this descending trend line once, twice, 3 times, consolidated, failed to break higher, and closing last week with this bearish engulfing. So just looking to continue a bearish momentum down to that same level here. Daily chart, same thing. Formed a bit of a rising wedge, broke to the downside. So the wedge is see if you connect the highs there. It's not moving in that pattern. Break to the downside. Test of 50 EMA. On the backside of that trend line in the wedge. Broke down, lower low, previous low. And then it's a bit confusing here because what you'd expect would be a continuation of a bearish trend. So lower high, lower high, high, lower high. So you'd be expecting a lower high again. But it sort of smoothed sideways. But you can see also again here, bearish MACD. Intradays, we won't really go into them right now because there's nothing, it needs more development basically. So next, Pound Aussie. Very bullish, you can see. Won't go into detail as much on these, but you can see it's bullish and a fair bit of bullish acceleration. So just looking for a quick pullback play, targeting 20 EMA or something like that. Double tops on a daily chart. Apart from that, monthly, weekly, very bullish. Pound Swiss. You can see it's been, price has been in this descending triangle and it's rejected there. A nice high test. So just looking maybe for a bit more of a movement down here to around one spot. I'll put it in 1.99 or 1 spot 2. So potentially back down to around here. So in order to look for a position on that, you'd have to look for a pullback to around the 50.382. See some deceleration, rejection, and then look to get a nice entry to play it potentially as low as 1 spot 2. However, could it be a trap? Left shoulder, head, right shoulder, bearish trend. You can see a bit of bullish MACD there on the daily chart. So something I'd want to keep an eye on if I was in a short. And if there was any bullish price action, I'd be bulletproofing ASAP to cut my risk and be looking for a potential long change of bias. Pound yen now. Now this, similar thing, it's in this descending triangle. However, the triangle, based on this, looks like it has much more to develop before we're looking for a break to the upside or the downside. So, but for this time, this point, once again, just looking for a pullback to 50 EMA daily, with 382 for a wave 1, wave 2 pullback, wave 3 being the longest wave down to previous lows. Fibonacci extension 1.272, and you can see 1.618 extension is a bit lower, but targeting around here. However, once again, you can see a potential inverted head and shoulders on the weekly chart. Left shoulder, head, right shoulder, and this right shoulder is showing potentially bullish MACD, and you can see that on the daily as well, slightly on the monthly, and it's more so on the lower time frames, but once again, won't be looking at them for today. So just see what happens. At this stage, for me, the bearish bias based on technicals have a greater probability, more confluence factors to the downside than the upside, in my opinion, at this point. So next pair we have dollar Swiss, and this is also potential continuation to the downside. See this bearish monthly engulfing, a little high test, and then last month closing this another nice high test. Well, it's closed, so it's not just gone. Beautiful. So tweezers, so look for a nice, once again, a pullback, daily 50, 0.3, 0.5 Fibonacci area. Nice rejection, and look to play that continue as low as 93 level. Dollar yen now. So dollar yen, this is probably one of my favorite pairs because just on those others, those inverse head and shoulders, so that's always, there's something going against the bearish bias. I just am a bit more wary. Whereas this, you can see it's respected this descending trend line and a beautiful, beautiful high test, bearish high test closing this month of February. Massive bearish weekly engulfing, and you can see it just broke straight through this trend line. So looking for a nice pullback rejection, targeting previous lows, which is previous lows on a weekly as well. So around 105 level. And this is dollar yen. So once again, you can see wave 1, wave 2, and wave 3. Now if we draw the Fibonacci extension, for those of you who don't know much about Fibonacci levels, have a bit of a research about it, but it's basically, I think is it prime numbers? I'm not 100% sure, but it was developed back, I think, 1900 and something. Anyway, it's based on market psychology and uses particular numbers on top of each other to work out different levels that price is going to retrace to, and then where it's going to move to next. So using Fibonacci levels in combination with price action, you can ascertain where price is going to go next based on the trend. So you can see here wave 1, breakout, So a potential change of this bullish trend. So remember, a bullish trend is higher highs and higher lows. Higher low, previous low, higher high, higher high, higher high, higher high. Low, higher low, higher low, higher low. But look at this. Where's the higher low? It failed. It made a lower low. So you can say that what price is showing now is a potential change in trend. So what once was a bullish trend now becomes a bearish trend. So looking for a pullback here is when the market opens next week, start of March. So last quarter, last month of the first quarter. So look for a pullback here, and this could be a potential almost 10% trade. So, and all the time frames are on your side, which makes it even nicer. You can see also a trend line could also be applicable here on the weekly and daily as well, but for now that's fine because I the same level drawn across all my charts. I know what it is. But for you guys, just so you know, you can copy this same thing and put it there, and look where it is, exactly respecting all those highs. You can do that again on the daily chart. There you go, so all the highs, and that may have fooled people because that was the first time I actually broke above this level. So this could have fooled people in thinking, yep, this bullish trend is going to continue or continue bullish, but no. So what you call that is a false breakout. And a false breakout, because as I said, people thinking here that, yeah, it's going to reject here and continue. Well, it didn't. And at that point, it was looking quite bullish. But if you see this trend line, that's why that you can see there that it's respected it once, twice, 3, 4 times. So there's a good chance it's going to do it again. So anyway, these are the pairs: Euro Aussie, Pound Swiss, and Yen, Dollar Swiss, Dollar Yen. So short, 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 and short, all shorts. So to the downside. Now we'll have a quick look here. The dollar index. Dollar index I use just to see where the dollar overall, what the US dollar is doing. You can see it's been ever since 2011 very bullish, and it's now coming back to the upside, actually forming this double top. See that better on a weekly, the daily chart. So once again, like the previous pair, said it's bullish here, so we'll see if it continues bullish. If it fails to break this high, we'll then start to look to see if it breaks down for a wave 1, wave 2, pull back wave 3, and by then potentially breaking this trend line, which is respected for its entirety. So looking good. Now, Dow Jones Index. So as of this previous week, the 24th of Feb, the Dow Jones at one point at its maximum, as you can see here, it lost 3,743 points. But it retraced, had a bit of a bounce before the close on Friday, closing here, but still, look at that. Last recession was in 2009, and it has had this drop here of, let's do that again. almost 55%. So you measure the same on this, 55%. It's roughly about their previous highs. High there before the last recession, and a little bit there, but yeah, you can see did it there. And that move from the previous low to there is nothing like this is. This is about 400%, 300%. So, you know, that movement there, comparison, not even 100%, and it fell pretty much a bit over half. So if this falls over half at, what was it, 330%, it would be 150 odd percent. Like this could fall so low, it's ridiculous. 150% is actually 75%. So yeah, about there, back to 7,000. So see what happens. But interesting times this previous week. They're blaming it on the coronavirus, but like if you look at this chart, based on market cycles, it can only go up for so long. And it's 2009 and now it's 2020, so 11 years without a decent retracement. So in my opinion, it's not the coronavirus. This market's well overdue for a good return back to value, for the process to start again, basically. Low interest rates for so long, high debt levels, just basically fake numbers. A lot of this has been generated out of just greed, basically. So it's well overdue. So now I want to move on to some stocks. Now, currently I am looking to place positions on inverse ETFs. I have some holdings in silver, which took a drop this week also. Some say it's due to people having to sell some of their assets in order to pay for margin calls, because potentially they've been in long positions thinking that the market's going to only go up, and it hasn't. So they've sold some of their other holdings to meet their margin calls. So anyway, the silver took a hit. This is a gold ETF, also took a hit, still respecting that daily 50 MA nugget, which I'm in. To gold miners ETF, took a very big hit. This is inverse crude oil, so you can see ultra short, took a position on this. Once again, you can see a breakout here, retest of, once again, 50 MA, 0.382 Fibonacci level, back to the upside, another 3, potentially here. See what happens in this market. If the market continues to fall, this could go even up to here, but it's an ETF, I'm not trading it. This is inverse real estate, throws out massive bullish engulfing. I bought a bit back here in August of last year, probably a tad early. Now this is inverse the S&P 500. See the breakout, so I'm waiting for a retest. So I'll retest this because it's inverse and see a breakout here and a pullback. So that pullback would equal, in the non-inverse version, pullback will equal it pulling back to here. Wave 1, wave 2, pullback, potential wave 3 continuation. See the same here. Wave 1 breakout, wave 2 pullback, wave 3, 4, 5, etc. So now that the market started to shift, looking at potentially getting into a few inverse ETFs. Now we'll have a quick look here at crypto. Bitcoin. See this bullish last year at this high, came down, and then this year broke that trend line. So in my mind, based on what I see here, bullish MACD, it still remains bullish until it breaks this trend line at 7,000, say 7,700, around there. Ethereum, still very bullish, similar thing, this bullish movement, 2019, pull back towards the back end of 2019, and then this year, same as Bitcoin, broke this trend line to the upside, making a clear higher high. So what do we call it? When a bearish trend's over and it's failed to make lower lows and lower highs, it starts to make higher highs and higher lows. Once what was bearish is now bullish. So wave 1 breakout, wave 2 pullback, wave 3 potentially back to 378 or over 400. Fibonacci extension. So, but we'll see what happens. It could also pull back a bit further to this weekly 50. But for mine, it's still bullish. Now XRP. XRP, similar. There is a trend line here. If you can draw it here. See it respected that. And then this year broke out again, so clear. Once again, it's bullish. However, XRP has had a fair bit more of a pullback than I would have liked to see for it to remain bullish because, well, look, you draw the Fibonacci levels in. However, it does depend where you start the wave 1. If you start it there, it's currently respecting 0.75 Fibonacci extension, or sorry, retracement. And if you draw the extreme lows, so the wicks, you can actually see that it is still respecting this trend line as well as 0.75 retracement, and also bullish MACD, bullish MACD. So look, if it holds here, potentially we'll see a breakout, and what I'd like to see is a break of this previous high at 34 cents. If it does not fail to break that, makes a double top, then further downside potentially could happen. And that would be tweezers, potential tweezers on the monthly. Anyway, anything else? I think that's about it, guys. You see here, I've got all the different sectors, and if you look across them, you'll see that across the market, because to be honest, you don't have to really look at all these charts. All these companies and what makes up these indexes of these different sectors pretty much is all in this one fund right here. So if you don't want to have a look at all of them, just look at the S&P 500, because what the price action is doing there is most probably very similar to what some of these other indexes for the sectors are. So, breakouts. And you just look across all of them. Consumer staples, breakout. Energy sector, breakout. Like, energy's been bearish before, it broke out there in the last year. Financials, ready for it? Breakout. On top was bullish. Well, remember, high, 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 low, high, low, high. Oh, shivers. It smashed that previous low. Very bearish. Excuse me. This is just a dummy trade. I didn't trade this, but you can see bullish trend. Previous low, lower low, lower high. Move sideways. Bang. 5.71%. Short the banks, baby. Healthcare, breakout. Anyway, guys, you get the drift. So as you can see, the market has started to shift into a risk off to a risk on. So this is the first week the market has had a massive drop for a long, long time. So this could be the beginning of a decent retracement. And you know, guys, like, you don't have to be afraid. Just invest in safe assets, gold, silver, physical, paper's okay, ETFs. Just beware though that look at it for the long term. If you're going to buy ETFs, maybe put a stop loss, maybe not, up to you. Not a financial advisor, but they don't really advise you in the best ways anyway, but we won't go there. Materials, and you can just see the general theme across the board. Real estate. There's all these breakouts happening. All once was what was bullish, all starting to show bearishness. So cash as well. If you learn how to trade, even better. You can trade short or long, it doesn't matter. That's why I'm not too concerned. Telecom, like everything. The whole market right now is down. Even crypto, even everything. This is bonds. Bonds, yeah. Bonds look to, and you'd expect that. That's the other thing you can invest in if you like, is bonds. And isn't that funny? Wherever you hear, you know, you look at this November 2018 and the market, well, big dogs are starting to get position then. Starting this big bullishness again. Oh no, the market's fine. Well, interesting how bonds start to go up in value if the times are good. We won't go there again. Anyway, guys, it's enough from me. Hope you've enjoyed this. And yeah, I'll see you guys next time.